The price of gold hit a new all-time high against the US dollar on Wednesday, as global stock markets fell after President Trump said he'll impose 25% trade tariffs on imports of automobiles, pharmaceuticals, and semiconductors starting April, whilst also blaming Ukraine for Russia's all-out invasion, set for its third anniversary just 5 days from now. "You should have never started it," Trump told Ukraine's President Zelensky via comments to reporters overnight, accusing Zelensky of wasting 3 years without striking a deal which even a half-baked negotiator could have secured by ceding territory seized by Moscow's forces. The dollar gold price has risen by over $1,000 per troy ounce since Russia's all-out war on Ukraine extended its 2014 seizure of the Crimea, peaking today above $2,946 in London's spot market. Having set 38 new records across 2024, matching the global financial crisis peak of 2011 with the most since 1979's all-time surge, the price of gold in US dollar terms has already set 11 new daily highs so far in 2025 at London's benchmarking auctions. With bank analysts rushing to raise their 2025 gold price forecasts, gold will definitely reach $3,000 per ounce this year, says Sabrin Chowdhury, head of commodity analysis at research consultants BMI. At present, our forecast for gold prices this year is an average of $2,500 per ounce per year, but we will raise this forecast in the coming weeks. 4 core reasons are driving gold higher, says a note from Chinese derivatives brokers Hualian Futures, part of $1.5 billion asset management group Dongguan Holdings, pointing to increased geopolitical uncertainty, strong demand especially from central banks, resilient U.S. inflation, and the U.S. government's worsening fiscal deficit. These 4 core logics are still there, but may weaken in the future, Hualian cautions. Investors should focus on what's affecting the U.S. fiscal deficit, the extent of the Federal Reserve's interest rate cuts, or even the suspension of more cuts, as well as inflation. With gold in dollar terms fixing around $2,943 this morning, New York's most active gold futures contract peaked above $2,962, widening the gap between COMEX derivatives and London bullion towards $20 per troy ounce before it retreated again to $17 per troy ounce. Down from a multi-year gap of $50 per ounce, that's still well over 3 times the typical difference, driven by fears that Trump's trade tariffs may extend to bullion, hitting commercial traders who use COMEX contracts to hedge the value of inventories held elsewhere in the world. With all due respect to President Donald Trump as a leader, said Ukraine's President Zelensky today, he is living in this disinformation space created by Russia, not least the claim that his personal approval rating is just 4% among Ukrainian voters. A survey published Wednesday by the Kiev International Institute of Sociology put Zelensky's rating at 57%, while Trump's own rating in the USA has slipped to 44%, according to the latest Reuters Ipsos poll, also released today. Silver meantime rose and then eased back alongside the gold price, peaking through $33 per troy ounce for the second time in 4 sessions, before dropping 50 cents as gold dropped $20 from its new record high. The MSCI World Index lost 0.4% as New York equities slipped at the opening, and European bourses fell as much as 1.5%, outpacing the drop in Asian shares, following Trump's latest Ukraine and trade tariff comments. Please like this video and subscribe to our channel.